everyone, this is your host with the Freedom Report, Rob Kientz. It is Saturday, February 22nd, 2025. I almost said 2028. I don't know why that popped in my head. Welcome back to the program. I know, guys, I've been away for quite a while, but that's because I got all sorts of stuff going on in the background, some of which you'll figure out today and some of which I'll tell you in the late spring as it comes to fruition. But just know that I'm working in the background on a lot of projects that are going to expand our reach here at the Freedom Report way beyond just this channel and are going to spread, more importantly, the information that people need to know around the world, just instead of our fair burg of the United States. So thank you for being patient with me as I work on those things in the background. I'm going to keep the channel. Don't worry about it. We'll be here. I just may have these periods of time of a week or so in between where I don't do a video. But to make that up, I'm going to do a really cool one today that's going to summarize the stuff that we've seen in the last 3 to 4 weeks, and in some cases the last couple of months in the gold and silver market. You guys are going to love it. Now, I'm going to basically walk through the presentation I'll be giving at PDAC, which is going to be in March. It's PDAC.ca, PDAC.ca. And at some point in time, also, I'll put that up on the screen. In fact, let me get that ready for you. What is PDAC? It is basically the largest mining conference in the world, but it's not only mining. It's got gold and silver dealers there. It's got, the industry. It goes to the Toronto Convention Center. It's going to be, I'll be there presenting March 2nd. And you can find me at the Investment Leaders Forum March 2nd, I think on one of the upper floors. And I'll be one of the presenters there. A lot of newsletter writers, big people. I think Rick Rule will be there. Peter Schroth will be there. A lot of people will be there, essentially telling you what's going on in the world, bringing you all sorts of information. It's going to be really cool. Now, they don't record these and put them online, so I'm going to show you what I will be doing at that event. In fact, let's go share screen right now. I've been stalling while I've been bringing this up on my computer because I didn't think about sharing it before. Sorry, guys. Like I said, busy, many things going on, but I'm going to share screen here, PDAC.ca. If you go to the convention and go to programming and go down here to Investment Leaders Forum. So again, convention, programming, Investment Leaders Forum, you'll get this page. You can see my friend Peter Schroth here as he was speaking last year at the Investment Leaders Forum on silver. He's a big silver guy, wrote a big silver book. I'll also be there. So just come down to Sunday, March 2nd, click on Investment Leaders Forum, and you'll see me. It starts at 10:30 a.m. Toronto time, and I'll be presenting at 2 p.m. right here. And the title of my presentation, The Landscape of Precious Metals, Role of Sound Money versus Assets, Monetary Assets, going back to the very first article I wrote in 2010 on Seeking Alpha. Gold is money, not an asset. I'm bringing it back to my very first article 15 years ago, bringing it back to gold and silver and what gold and silver really are. And I'm going to tell you who's going for the gold and the silver there. But if you can't be there, you're going to get it here today for all of those of you that can't come up and join me, at the conference and see what we're doing. I like my little profile page here on PDAC. This is a beautiful sort of geode-like rock, which is gorgeous. It has all my information there. It's really nice. I love that. I think they did that instead of putting my ugly mug up there, even though I submitted it. And honestly, I kind of like that better. It was a very pretty, beautiful piece. Now, if you do get the chance, you're going to be in Toronto that weekend. I think it's like March 1st through the 5th-ish type of deal. The first couple of days are more like training. They have this whole curriculum. It's like going to college. Then they have the exhibit floor, and then the investment leaders are all in the second. It's just a cool place to be if you just want to hobnob around the industry, learn how the industry works, from getting it out of the ground in the mining sense to getting it into coin and bar form. Royal Canadian Mint has been there. Monet has been there. All these companies have been there. Show up at the Toronto Convention Center. Pay your little small fee to get in there and go hobnob around. A lot of the people that you see on YouTube will be there. A lot of people that you see writing newsletters will be there, but you'll also see a bunch of other people, and you can go get information. It's awesome. I really enjoy doing it. All right. So let's get into the presentation without further ado, because we're almost 5 minutes in, and the impatient ones of you are going to write down in the comments, skip to minute 5 to where Rob actually gets in the presentation. All right. So we're going to get into the presentation. We're going to share screen. And on this, here we go. Gold and silver as money is not just an asset, is it? Coming full circle to where gold is not treated as an asset, it's money. I'm going to show you why. And I'm going to show you what's actually going on behind the scenes. But even though we'll see what's going behind the scenes, we don't necessarily know everybody that's doing it. There's a lot of speculation about who's pulling through the gold through the COMEX and what happened to the LBMA and who the players are. I'm going to tell you, we don't have enough information to know that. We can speculate, we can think about it, but there's information that you will never know to tell you. And also, I don't think that anything that's being repatriated into the United States is necessarily going to be used the way in which a lot of us would love it to be used. And even though people are cheering it on, I think you have to be kind of careful. In other words, you got to watch what the money masters and the politicians do with the people's wealth, essentially, which is what gold represents, or at least that part of the people's wealth that's been captured in our sovereign nation federally, if that makes sense. All right. Who am I? Well, you guys already know this, but I'm going to throw it out there. I'm proprietor of the Freedom Report, formerly known as Gold Silver Pros, for about 4 years. The last year has been the Freedom Report. I wrote for many industry pubs for 12 years, from Yahoo Finance to Seeking Alpha to NASDAQ.com to MarketWatch to Financial Sense, all that kind of stuff got syndicated. But the last 5 have been more social media and YouTube and Twitter. I wrote a book back in 2009, self-published in 2010, called Drop Shadow, The Truth About the Economy. I wrote that book before I did anything else, just because I was inspired to do it. You know, you've heard my story about being laid off in the Big Four and saying, what's going on? And then I started researching stuff, and I came to Austrian economics, and I came to gold and silver, and I came to the truth, the capital T truth, like I say in my book. And that was the very first publication. You can get it on Amazon for $7.99, or if you're super nice to me and email me, I might send you a PDF version of it. Since it's about 15 years old now, I don't mind doing that. It's just if I have time. So I'll do it if I have time. I'm also on the board of directors for Citizens for, well, get back up here. Sorry. Board of directors for Citizens for Sound Money. Focus on legislation in 4 states to make gold money again, not just removing sales and capital gains tax, but make it money again, because it's still in the Constitution. We're just doing air cover by the states through Amendment 10, basically asserting the right to say, hey, you know, and all this. And there's all legalities behind that, but we've researched all that, and we're putting out legislation in the states. Very popular, by the way. It's been passed in 6 states in the union. We're trying to get 4 more to try to get it up to 10. So we got 1/5 and get some big states in there, spending a lot of money, a lot of time in doing that, fundraising and, you know, lobbying and writing legislation, all that good stuff. What we're also really doing that's really cool is we'll provide continuing education through the new Sound Money Academy, which is going to be out later in the summer, in which we're going to have educational content for legislators, because a lot of legislators don't really understand how money works. For churches, for schools, for individuals, we're going to serve all of the market with information to help people understand how money works. So if you understand how it works, you can understand how to manage it better, and it can kind of put that control back in your life and take it away from all these central agencies that they know how it works and they use it to their advantage. We're also producing a TV show to air on cable this summer. We know that we're on 1 channel. I can't divulge those yet. There are conversations with 2 more. There is a lot of interest in this TV show. I've been out to 2 different sites last year, 2 different international sites doing filming. We've been to domestic ones as well. So we're not just focusing on the United States in this one. We're bringing this around the world. And so in addition to cable TV, there's going to be other options you can have to view this if you don't have those channels. And we're going to make it available to over 1 billion people across the world. We'll get more into that. I don't want to say too much. There is a little bit of a website here, which is not up just yet. So you guys are going to look at the video and type in this website. No, it's not there yet, but it's a website we'll use as our landing page to promote the show. So just put this in your bookmarks for later. Give it a couple of weeks until we get it created, and then we'll have that for you. And it'll kind of, as we get closer to that show coming out, it will kind of give you that information about where you can find the show and that type of thing. So just kind of bookmark that for now. I'm also head of operations for Kinesis USA. I'm working on Kinesis's US bullion strategy. I deal with the gold and silver bars, coins, the gold notes. If you go to kinesisbullion.com, you see the gold notes, the coins, and the bars. That's what I do for Kinesis, and we're trying to expand and build that network beyond their really, they had a concept since 2022. It was very small and served a niche market, and now we're building that out as a full service retailer and dealer distribution, business to business distribution. That's what I do for Kinesis, working on that, and we'll get that built out. We're really in the growing stages, putting in an infrastructure, hiring people, and doing things like that. So you won't see it right now because we're doing all the prep work, but pretty soon you're going to see big changes coming to Kinesis's bullion store for those of you who want the physical bullion. Now, I realize there have been some issues in the past with that because it wasn't fully built out. I'm aware of all of them, and it's my job to kind of go fix that. That's what they hired me for. So give us a little bit of time. Give me, 90, 120 days. I'll get the existing small issues that we had sorted and expand it to where we can serve the big market. If you want to know more about Kinesis, just go to kinesis.money. That is their digital gold product or blockchain product. Or if you want to know more about their physical bullion, because they do have their own mint and their own refinery, and they do source their own gold, and they are a full service, vertically integrated service provider, you can go to kinesisbullion.com and stay tuned to kinesisbullion.com for some additional designs. We're working right now on additional designs. And if you've been paying attention to my Twitter, I've been asking, what designs do you guys want? I'm doing focus market research on social media to bring you some really cool designs in the future that you guys want, that Americans are going to want. We're going to do some really cool American stuff. So stay tuned for that. Also stay tuned for another announcement with regards to me and Kinesis and social media, which we're cooking up something. We're in the kitchen, throwing some stuff in the pot and cooking up some nice dinner for you guys. So stay tuned to that. And those are only part of what I'm doing: the TV show, the Kinesis stuff, and the legislation and more. And you can see why I'm so busy. I haven't been on social media lately, but I'll continue the channel. Don't worry about that. But just know we're super powering what we do here through the help of a nonprofit and some companies in the space and some partners to bring you more, more. So I'm not doing less, I'm doing more. You just don't see it yet. It's under construction. It will get there. All right. Thanks for all that. Probably about 8 to 10 minutes in, but wanted to make that announcement. Let's go further. This is the presentation. This is Dave Ramsden, Bank of England, Deputy Governor of Markets and Banking, that was on TV, and they were asking him about, banking stuff, like about interest rates in the Bank of England. Somebody asked him the gold question, and there's a transcript of it. There's a really cool video, but I'm going to show you the transcript because this is a conference that can't show video. But basically, he was stammering like, gold is heavy, and it's hard, and we've got these slots for people on why they couldn't deliver through all the demand, and why it basically is now global demand through the Western markets has been routed from the LBMA, which didn't have it, apparently, based on the fact that they couldn't get people in, and they were trying to limit it. They were trying to put like a limit and essentially say, we don't have a full 18 count of toilet paper. We can give you one, but you have to come back next Tuesday. They're doing that sort of thing. They're slotting people because they only have so much real gold that's free. And so a lot of that's come over the COMEX. We're going to walk you through that process in this presentation. I want to walk you through the transcript of what this guy said. I'll just do the first paragraph, and then I'm going to come down to the highlighted section. So he was asked about the gold, and he said, yeah, I didn't think I picked up the question. And this lady was like 10 feet from him with a microphone. He's like, yeah, I don't know if I really heard you. 10 feet from me with a microphone, but I'm going to stall here. Just listen to what he says. And look, there's, it's worth, given this is an NPR press conference, it's worth putting what's been happening to gold, which is a detail about your question in the context of what's going on in the world economy and the uncertainties out there. That's a lot of speaking without saying a darn word in answering her question. It's also worth bearing in mind that this helps explain some of the facts around the time it's going to take to get gold out of the banks' vaults because of the nature of the approach of our gold. So, the first thing to say is I think it's broadly known, but we have the second largest stock of gold in the world, over 400,000 bars of gold at the moment. Okay, fine, but do you own them? Can you deliver them? That's gone down a bit since the end of 2024, reflecting the market conditions that you're talking about and have been a feature in the news. But the stock has gone down by about 2%. Yeah, the stock's gone down about 2% because you can't deliver the physical. Now we get to the highlight section. And the U.S. gold market has been trading at a premium to the London market. Yes, COMEX price has been higher than London. I've been noting that on shows for the last couple of months. And commercial gold holders have been looking to take advantage of that price differential. So they've been, there's been strong demand for delivery slots. We can meet that demand. We all of our main, I don't know what that means. We all of our main counterparties, as it were, or better to say, all of those bodies who ship the gold, they've got the delivery slots they need over the next few weeks. If you are coming new to us, you might have to wait a bit longer because of all the existing slots are booked up. Now, the reason why it looks like he's breaking up a complex sentence into two simpler sentences, and some of those are fragments, is because I imagine it's AI trying to read what he's saying, and he's stammering so much and stopping in the middle of his sentences, AI is going, oh, that's the end of a sentence. Like he's having a hard time getting complete sentences out in normal conversation. And he doesn't really say anything there other than, well, we've got slots and we can do it and all this stuff. But look at the next few paragraphs where he talks about there being a lorry in the yard. What's a lorry? That's a British way of saying it's an 18-wheeler, or a rig we would call here in the United States, in the yard, meaning it was picking up gold. And that kept him from getting into the office. And I'm thinking, does the lorry drive up, put the back of its truck right up against the front gate where the employees walk in, and you just roll the gold through the lobby. Now, usually there's like a back way and a whole bunch of security. So what would a lorry in the yard have to do with slowdowns in delivery of the gold and employees not being able to get in the building? I don't know, but I think this dude was grasping, because I don't think he was prepared to answer the gold question in this interview about Bank of England monetary policy and interest rates. But he had to. So here it goes. But this is a very orderly process. It's worth stressing, he says. Compared to some of the markets we usually talk about, I mean, it's obvious point, but gold is a physical asset. So there are real logistical constraints and security concerns. Of course. And you've been managing this how many decades, how many hundreds of years? And you're just now figuring out it's a physical asset and that there are logistical and security constraints because it's a physical asset, and you can't just press a button on a computer and make more of it. Ding, 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 ding. Okay, further. Quote, getting into the bank for me this morning was a bit trickier because there was a lorry in the bullion yard. And I mean, that's how it, but that's just the reality of it. It takes time. This stuff is quite heavy, as you know. I got to get my camera focused. I was laughing so hard my camera lost focus. There's a lorry in the yard, and it kind of takes time. And I'm sorry. I don't know why this makes me laugh. Okay, continuing the quote. So, I think these things sometimes get forgotten about in a headline that says, there's a 6 weeks delay or something like that. Yeah, because there's a 6 weeks delay. That's why it's in the paper. There's a lot of demand, but we've got slots for all the people that currently want to get their gold or want to ship gold and have a customer or managing it. So wait a minute. Do you only have like one pallet jack that can only load like 3 bars at a time at this one lorry in the yard? It's not in the yard. It's backed up to the front gate because you don't have a security gate, because you never actually got rid of the gold. It was all just recirculated in this Ponzi system. And so to actually deliver it, you never had like a back roll-up door with security professionals. You had to roll it to the lorry actually in the yard leading up to your front. No, I don't think anybody's buying this. What does it mean? It means they don't have enough, and they're slotting people because they only have enough free that comes in and out of the system to service a certain amount of people at a time. And we basically broke the system. People wanted delivery, and they went to London, and they couldn't do it. And what have we been saying for years? There have been commentators writing about this for 30 to 40 years, and I've been talking about it for 15. They don't have all the gold. It's an OTC Ponzi'd market by design. And then when people came and knocked on the door and said, give me the gold, what happened? They couldn't do it. They couldn't do it. Now, this is a leaked document. Actually, it's in 2021, 4 years ago, that talked about, from the Reserve Bank of Australia, strictly confidential, it got leaked, about serial numbers of gold bars held at the Bank of England. I'm just going to read the second paragraph. There are 2 things here that are absolutely stunning that prove that basically there were shenanigans going on. We don't know the depth of them because there hasn't been an official audit publicly produced, but shenanigans at the Bank of England. This information is strictly confidential, and we request it not be shared outside the Senate Standing Committee on Economics. We request that it remain in the Secretariat's position and be able to be viewed by the committee members, but not copied. Quote, right? Publication of these data would raise security risks for the Reserve Bank. The existence of fake gold bars has been detected in the past by the presence of duplicate refiners' serial numbers. They're talking fake gold bars. Either it's tungsten or more that it has duplicate numbers on it. I don't know. They don't explain. So it's either tungsten type of bars or a similar scheme, or they've just punched multiple serial numbers on the bar to say that there's 2 bars when there's 1, or 10 bars when there's 1. They literally are stamping the bars multiple times saying, we've got that bar twice so that we can say, you got it and you got it, but just keep it here and don't take it out. Because if you do, there's a lorry in the yard and we can't give it to you, because really what we did is we rehypothecated it. Or in simple terms, they sold it multiple times. That's what you call, ladies and gentlemen, a Ponzi scheme, which seems to be indicated by the documents coming out. Josh Philip Fair, CEO of Scottsdale Mint, had a nice Twitter post on physical silver liquidity issues have started in London as well. So they're not just doing it with gold, they're doing it with silver. And there's a whole article there if you want to go find his Twitter account and click on that tweet and go to the article. There's a whole documentation about what's going on. And it's not just the tariffs. So the gold market has substantially changed. Very quickly, the Western exchanges have been called on their shell game of paper derivatives and promises on top of the actual free metal. London was strained first, but who done it? Let's deal with London first. Was it the US for the Sovereign Wealth Fund? And I'll talk about that here in a moment. Is it China because they've been buying all the gold they can for decades and keeping all the gold that they produce in-house and not letting it go? Is it Russia because of the sanctions, which may be ending? There's talks between Trump and Russia and ending some sanctions and things, and being all nice and friendly now after all this kind of Cold War area we went through the last couple of years, few years with them. And if Russia has gold, but also probably needed some gold, so they were probably playing in that market too. The banks, because they want to meet Basel III and high quality liquid asset requirements when the fiat system crashes, which we know it will because they've already come out with central bank digital currencies, or the private cryptos like Bitcoin, and that's what they want to use because that's what they've been writing about since 2015 publicly, over and over and over again, and talking in conferences and on video. It's all over the internet. Yeah, that's probably part of it. What about the wealthy? Because I know the fiat game is nearly up. If you go to that other reportables on the COMEX report, when it talks about futures positions, if you're a wealthy family office or a wealthy person, if you have enough money, you can go play in that market. You can get it off the COMEX. We know they play in that market. It's the definition of what other reportables are, right? According to the COMEX website. So we know the wealthy are in there. So how do we know who's doing this? Everybody's like, well, it's this and it's that. And as people just say, well, it's got to be Trump and his team, or it's got to be China. It could be all of them, because what we don't have is the ledger detail and the account detail for the individuals trading through the banks. And it's not just the banks, it's their clients. And we don't know who all of them are. We can only speculate, but I've said this for years. And so we don't know all the players. And that's going to be one of the themes of the presentation, is we don't really know where all of this is going. We do know that there was less gold than they said physical, and that they said that there was more on paper, and that's the game that's being called. So we're in the first stages of the run on gold across the Western markets. Actually, the first stages were in the COMEX the last few years of heavier deliveries. And then when people got tired of not getting it, it's really kind of stage 1B, where now they came in the front door, punched it down, and said, give it to me or else. And that's the stage we're in now. We've talked about this for 15 years, and we're on it right now. On it. So here's a print from Zero Hedge where they're talking about the big three gold vaults and how much gold's come in. Look at the far right of the chart, the end of 2024 and 2025, to see all the gold rolling into COMEX, supposedly. Now, is this all going on planes rolling over there? Is it physically being moved? This is just a chart. This could just be a chart of warehouse receipts. Do we know it's all in the U.S.? I don't know. But there is some export data, and it does look like a lot of it's flowing in. Why? Is it Trump? Is it the wealthy? Is it China working through banking intermediaries? Because we know they do, because they have a relationship with JP Morgan. It's one of the biggest deliveries on the COMEX. And JP Morgan's helping them build out their own Shanghai, not only for gold and silver, but for all the commodities. And did I report that at Silver Symposium 3 years ago? Yeah. So it could be a lot of people, but it's going through COMEX. It can't go through London. They didn't have it. And now it's being going through COMEX. And it's people standing for delivery. We also have Swiss gold exports. Now, the Swiss do a lot of refining. So maybe they're remelting the bars, or they're getting gold up from Africa or other places from mines, and they're refining into bars, but it's going where? The United States, the United Kingdom. But there wasn't enough going to the United Kingdom to serve the London market. There was about 4-ish times, a little bit more than 4-ish times going to the United States. And because of that, the United States really is becoming the focal point of this gold trade, because LBMA couldn't handle it. LBMA is the oldest market, but it might have been the most Ponzi market. We saw that. And now people are coming to COMEX, and I think it's a bunch of people. I think it's a big spider chart of different people going after the gold. It's the world saying, we're tired of the gold shell game. Give us our gold, including the United States, but also a lot of other people. Gold exports from Singapore to the U.S. surge. Singapore is also another area of refinery, but it's also an area where a lot of gold moves through from jewelry and gold trade. It's one of these free market sort of landing spots for a lot of stuff, including gold and silver. And boy, look at that spike since October of gold exports from Singapore to the U.S. Bam! I mean, total exports actually went down in that time frame, but the ones that are going up are the U.S. is literally gobbling up almost all of those exports. Look at those two lines converging. The U.S. going up, the overall gold going down, but the U.S. is saying, I'll take it. Thank you very much. It's a lot. Well, apparently there's this new golden age of America beginning in the United States, and that also has to do with gold, and we'll see here in a moment. Just kind of wanted to put that out there. Is it the U.S.? Let's talk about the U.S. for a minute and the U.S. strategy around how they're supporting treasuries and the dollar. And I've talked about this before on social media, and now I'm going to give you a more well-rounded answer now that we see what's going on with the gold, and that the U.S. is probably one of the many entities playing this game of musical chairs, the music stopped and trying to grab the gold, right? They're one of. What is the U.S. likely going to do with the gold? Hint, it's very similar to the Bitcoin fund game. So on the left, you've got Bessent. He's the gold guy. On the right, you got the Commerce Secretary. He's the Bitcoin guy, right? He's a Bitcoin bro. And what they're going to do is, Trump stated in Bitcoin National, I was there in attendance, and then Ramaswamy and that, I think it's a Wyoming senator, came on and talked about the plan and held up, this is our, what we want to put into law. They talked about taking Bitcoin, buying 1 million of them, punching up the value, and then for at least holding it for 20 years and using it to support the dollar. In other words, rolling it off to support the dollar. They're not trying to replace the dollar with crypto. Listen to what they say. To use Bitcoin to absorb that inflation, pump it up and roll it off, basically to save the buck. They're trying to save the buck. I think they're going to do that with the gold. And I'm going to show you why in a moment. It's something 𝙁𝙁𝙁𝙁𝙄𝙇𝙄𝑼 said. I think she leaked out the game because 𝙁𝙁𝙁𝙁𝙁𝙁 and Trump have been linked for several years about gold. And he's praised her and she's praised him. And I think she's an advisor to him, along with these two guys, Bessent and I think it's 𝙁𝙁𝙁𝙁𝙁, the Commerce Secretary. And these guys are influencing him about what he's going to do. But he's using this not only for the Sovereign Wealth Fund, he's using these as like inflation funds and slush funds to basically curb the impact on treasuries and the dollar. They're trying to save the treasury dollar fiat system. They're not trying to revalue gold, which we don't even know is in Fort Knox, if it's still actually there. They want to do a paper thing where they get the Fed to give them a bunch of money because of this and use it to pay down debt and do stuff like that. At the same time, they're using Doge to shut down some of these agencies. By the way, Doge is not shutting them all down, but we'll do a different video on that. So it's Bitcoin guy and gold guy. This is their plan. And what are they going to do? Well, this is a tweet by 𝙁𝙁𝙁𝙁𝙁, to which I have a response here. I'll read in a moment. But this is the plan. Listen to what she says. Not giving it away or selling it. That's the point. She's talking about gold. Using it as a specific collateral to guarantee the treasury bonds for redemption in gold. What will happen when they guarantee the treasury bonds in gold? People are going to take the gold, not the treasuries. You're going to bankrupt the U.S. of its gold if you do that. If you allow them to redeem it in gold, people are going to take the gold. Nobody wants the treasuries. Not really. Some of these financial houses want it for yield. But if you can trade in your near worthless treasury because the U.S. has $37 trillion debt they can never pay back in conventional means, you're going to take the gold. Why? Because leading up to 1971, they did it when they overprinted the dollar. The dollar is part of that treasury system. The dollar and the debt are flip sides of the same coin. So when they printed too many dollars, people took the gold, especially Europe. They took 2/3 of our gold from 27,000 tons to 8,000 tons that we supposedly have. They're going to do it again if you back treasury. They back the dollar, they overprinted the dollar. Europe took the gold from us and other parties. If you back up treasuries, they're going to take the gold. And we all are going to be left with treasuries. It's funny, it's stealing the gold out of U.S. hands and giving it to the rest of the world. It's an insanity plan. Insanity. America's gold holdings of 261 million ounces must be audited and verified before being warehoused as official backing the 50-year U.S. bond. They want to do a 50-year U.S. bond. There's also been floated a perpetual bond that you can't ever really get rid of, and they just pay some amount of interest, which means you never pay back the principal, which means you can expand the Ponzi even more because you never have to pay back the principal. All you have to do is meet the demands of the interest payments. You can do ultra low interest payments, use Bitcoin and gold to finance that scheme and continue the dollar system. That's what Trump wants to do, and that's what his team wants to do. And so I said, wait a minute, use gold to back a failed fiat system has led to corruption more and has broken the backs of American people through inflation? No thanks. We should just make gold money again and stop supporting failed banker debt systems that are designed to enslave people through the process of inflation. Remember the book And the Fed by Ron Paul, The Creature from Jekyll Island, from J. Edward Griffin, my own book, Drop Shell, The Truth About the Economy, and many others. We talk about this. Why would the American people want to perpetuate this system? I don't understand. They don't, actually. So now we're getting into the COMEX deliveries. This is screenshots a couple of days old. The numbers won't be exact, but in February, we had 71,651 contracts. You can see at the bottom of the screen. 71,651 contracts in February. I've never seen that number. We may get to 80,000 by the time it's all said and done. This is redonkulous, the amount of gold, the amount of people standing for delivery. Now, these aren't always actually physically delivered, as people keep harping me on Twitter, and I know that. That's not the point. Even if only a small portion of these are delivered, that's going to do two things. One, it's the highest that I've ever seen it, especially in a delivery month like February, which is typically fairly thin and not that robust. It's 3 times almost what it is in December, which is usually one of the most robust gold delivery months of the year. All this information's at the bottom. 25,856 in December, 22,538 contracts of 100 ounce gold in January, 71,651 contracts of 100 ounce gold in February. And they're not going to deliver. There's going to be a lot of cash settlement. But what's happening is when you do exchange for physicals from the US market to London, they figure out they didn't have it. So London didn't have it. So they weren't doing as many EFPs, and they came to and stood for delivering COMEX. Now, if they don't deliver, it'll break the back of the exchange. It'll prove it can't deliver the gold. They've already proven LBMA didn't have it. You saw the Bank of England guy on video, and I did the transcript of him stammering through, we got a lorry in the yard, and we got slots, and you can't, we're rationing toilet paper. You can't get the gold. Well, that's what they do in COMEX. They ration it and say, well, cash settle, cash settle, cash settle. And you can't force them to actually deliver physical. But what you can go and do is break that system by putting so many demands through there that it breaks it, that you either get as much as you can, but that it breaks the system, and it's going to lose confidence in that system. And the gold trade's going to roll east, and it's going to shift the balance of power of setting the gold prices and running these Ponzi systems from the west to the east. And I don't think the east is going to take all that power and say, we're going to have this perfectly pristine market and we'll always deliver 1-for-1 on the gold. I think they're going to do this. In fact, they are in the Shanghai Gold Exchange. The derivative, or the paper part of the trading has increased. They're already taking the paper trade over to Shanghai, and Shanghai's delivered a lot more gold than the American market, and its trade is starting to look like the American market. That shift is already occurring, but don't think that the Shanghai is all 1-for-1 delivery. It used to be really high delivery, and now it's starting to come down. I did that on my last show, or last couple of shows. I told you guys that. The derivative trade's just moving east, but it gives that pricing power and the market the ability to use gold to convince people that you have a stable financial system over to the east. That's going to absolutely crash and destroy the dollar and treasuries, which is why G.G. Shelton said we need to back our treasuries after we do an audit, probably a fake audit that is not going to really be done by a third party, a reputable third party, so that the Bitcoin guy and the gold guy can basically use these paper systems, the paper gold that we may not have, we probably don't have, and paper Bitcoin to support the dollar and the treasury. Why? Because the power of the gold market and the power of de-dollarization is moving value to the east. This is the U.S. reacting to that and trying to save the system. Trump's not doing this. It's not going to send you a gold bar. He's trying to save the system because he knows that system crashes, what happens. But by perpetuating that system, it actually prevents us from actually solving the longer term problem. Okay, you see what's going on? This is the game that's going on, at least in the U.S. part of the equation and in the China part of the equation. You can see it. And we've been predicting that for years. Well, Redacted did this Twitter poll to the public and said, do you think there's any gold at Fort Knox? Only 29% said yes. And we're talking any gold, not all 8,000 tons or 261 million ounces. Any meaning a single bar, thank you. 71% said no. 18,000 votes, 2,000 thumbs up, 493 comments. Big poll by media outlet. Over 2/3 of people don't believe there's gold in Fort Knox. Any gold, not all the gold, any. And that's why the confidence game, that's why the paper trade, that's why revaluing gold on paper and having the Fed print money, which is more inflationary, into the system so they can support the dollar and treasuries. We're down to our last assets that we can use to extend the Ponzi system. This has all been predictable. We've been talking about this for years. So people think that we're trying to reform the system. We're trying to save the corrupt system. But what is being done to extend to put a non-corrupt system in place? I don't see those measures occurring. Well, what's another big player? This is going to be next to last slide. Last slide, I'm just going to ask you guys a question, see what you think. China. Look at Chinese gold. This is from an article I wrote for JM Bullion about a year and a half ago when I was doing articles for them. And I said, how much gold does China have? And I said, at least 25,000, 27,000 tons, at least, that they have. It's not all in their central bank, or at least they're misreporting. It's probably in their wealth fund. It's probably held by the citizens and other state agencies and vaults. And they're not reporting to national reporting because they don't have to. They're either lying or they've got it stashed other places. It's obvious how I would do it if you didn't want it reported. Well, on the left-hand side, Chinese gold production plus net imports. Look at all that gold. Well, we know from the article I run, JM Bullion, they don't ever let gold get out. They do send some to Hong Kong for jewelry, and some of that does get out, but it's a little baby fraction, and a lot of it's sold back into China and into those markets. It's not sold around all of it, the rest of the world. It's only a minuscule amount anyway. The vast majority of gold that China's ever imported or produced in the last 30 years has stayed in China. whether it's jewelry, bar, coin, or whatever form you want. On the right-hand side, Chinese gold production plus SG withdrawals. Now, the Shanghai Gold Exchange withdrawals largely stay in China. China doesn't let this leave. When you're saying withdrawals, you're like, oh, the U.S. is in there. All these, no. This is domestic withdrawals, largely. And if you add all that together and you look at all the charts I had in that JM Bullion article, I guesstimated 25,000, 27,000 tons. If you extend this out over the time frame they've been doing it, plus what they produce, plus what they import, plus what goes out as jewelry. And you could see that there was, I think it was like a UN shipping system which tracked gold movement out of China. It was like this little baby amount. So I have artifacts in there, but essentially we know China's keeping most of the gold that they make or import, and even that they manufacture as jewelry to the people, to the state, to the sovereign wealth fund, to businesses. China is probably the richest country in gold in the world right now. Certainly is not the United States or even Russia. It's China, 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 China. And where is that trade going from? The west to the east. The power of the gold, the ultimate financial asset, is squarely in the east. London has been exposed. COMEX will be exposed as well. And if the U.S. government gets their way, they will be exposed for using the gold to support a dying treasury and fiat dollar because nobody wants to buy our debt anymore and they're de-dollarizing. When will the truth be known about all the players in the COMEX market sucking out the gold? We don't know. We do not know. We don't have that line level data, and we can speculate. And I've done some speculating here, but I'm also admitting that I don't know all the answers. I don't know where it's all going, and that's going to be the subject of my presentation at PDAC. We don't know. We can speculate based on things like gold flows and accounts and what people have said. You can put puzzle pieces together, but like I said, we don't have the line item detail. We don't have the audit level detail, the forensic detail to really tell us. And so just be careful on what you think is going on or what you let somebody tell you what's going on. Have a healthy sense of we don't know the whole story and skepticism, because a lot of what the politicians will say or even the news will say may be from bad sources that they may not know, and you may not get all that information. And they put just enough information out on the official exchanges to kind of get you a taste of what's going on, but it never tells you who all the players are. And you can't just blame JP Morgan HSBC because they're doing it for others as well. I've been saying this for years. JP Morgan is not just serving JP Morgan. JP Morgan is serving the US Fedgov and Chinese government. And I said that they're helping Chinese build out their Shanghai exchange, not just the gold exchange, but all their commodities exchange. That was in articles that I said in Silver Symposium 3 years ago in Coeur d'Alene. I've said it on my program, and I've said that they're probably doing it for Fedgov, and they're probably helping the US government, the BIS and the BIS with swapping and things like that to keep the actual physical from flowing out and keep that shell game going. But they're not all doing it for themselves. People who thought JP Morgan was controlling gold and silver by themselves, they don't understand the game, I don't think. Is the central bank, is that bank in there? Yes. Is the central bank in there? Is the BIS in there? Or the Fedgovs in there? Are there wealthy individuals? All of the above. And it really, the question is where, when the music stops and people sit down, who are going to have a chair and who's not? And it looks like the U.S. will have a partial chair, even though they're going to probably squander the gold in this scheme, support the dollar, while the East is saying, no, we'll keep it on our books and use it to strengthen our economy and our currency and all those types of things. And I think that's what's going on. It's a very complex situation, and it requires a lot of analysis and really paying attention to what's going on. And I want to thank all my my friends and peers in the gold and silver space for documenting this. Each of us has a piece of it, and we're trying to put this puzzle together and kind of figure it out. It's very fascinating what's going on. But what you can make strong conclusions is that the US dollar is failing, that they're using Bitcoin and gold to prop it up, that if Judy Shelton and the Bitcoin bro and the gold guy that were in that picture with Trump all have their way, and Trump has their way, they're probably going to try to support the dollar with it. We'll probably lose most of it if they explicitly back treasuries and give redemption rights. Or even the dollar. We saw it in 1971, Nixon taking off the gold standard. This is just part two of that same play. We know what's going to happen. We know that China's taking the gold and saying, we'll take it, but we're actually going to keep it in-house and actually be a strong government with gold and a strong nation with gold. And you're seeing that shift from west to east. And you're seeing how that's going through our markets. And there are other players we just don't know, but they're there. It's just a fascinating game. But the gold game is up. The jig is up right now. What we've been talking about for 15 years and other commentators have been talking about for 50 is up. It's right now. The change is right now, right before our eyes. And it's fascinating to see all this stuff go down. It's just absolutely fascinating. All right. I'm at almost 40 minutes. Thank you guys for tuning in. Like I said, no, I hadn't done a video in a while, but reasons why you'll see that in the months going forward. We're going to have a bigger impact and hopefully a positive impact on the community and educating and bringing legislation and content, which will help people not only on this little channel in my little Fairburg, slice of the social media world, but also blow this out and expand it to many more people. Because what we want is to educate people on how to maintain their wealth. I don't care if you get rich or don't get rich. That's not my intent. It's to maintain wealth, to use God's money to do it, to use natural money to do it, and to do it in a way which gives you choices and supports your family. And so you can live a happy, healthy life. And hopefully our nation states don't screw it up too much. That's really the goal here. And hopefully, you guys will appreciate that. Thank you for tuning in. We'll have another video. I'll try to do one every week if I can. But stay tuned to the channel. And if you want to get me every day, I do at least one post every day on Twitter, sometimes multiples. Get me over there. That's what you're going to get me every day. And I'll try to do at least a video a week going forward, depending on how busy I get with all the other stuff. And I'll bring you more of it. And I'll announce it as we go. And just remember, for your bullion needs, stay tuned to KinesisBullion.com over the next few months as we get that built out and really ramped up into a full service provider, the way that really was intended to be, and bring you cool designs and pay attention to my Twitter polls when I ask you guys what you want, because I'm listening to you and we're going to bring it to you what you want. And I think you're going to love it. All right. Till next time, Rob Kientz, Freedom Report. God bless and good night.